Good afternoon, traders. It's Simon at Kairos Capital Markets with the weekly review of Aussie dollar and pound yen, and we've also the added bonus now of euro dollar. Seems to be almost a thing of the normality now. Anyway, so we'll dive to the DXY, and what we can see here on the daily chart, we can definitely see this downwards trend line capping price to keeping it to the downside as well. Now, for me personally, when looking at the monthly chart, I was quite happy to see this bullish tweezer bottoms here move up, then we pop back down again, and now we're just starting this month here. Now, going back to this level here, 92 could be a key level again, obviously, and I wouldn't be surprised to see the price move down to 92. Bear in mind, it's got a little mini trend, obviously, on the 4-hour chart, so we'll pop down to the 4-hour chart here. And what you'll see is the 4-hour 50 MA is capping price all the way down bit by bit by bit. So what I personally would expect is a move down to at least 92 again, and we just watch for that level there. I feel if we do get a test of 92, bit of deceleration there on the daily, I wouldn't be surprised to see a break to the upside, and that would create a nice little mini double bottom on the weekly, which then confirms this monthly chart here. And a move to the upside would be very expected, and I would expect it to go around this area here, 108, 110, could go higher, but that's what I'd expect. Just to give you some insight on this again, to give you an idea, the monthly 50 MA isn't normally respected, but I think here it will be, purely because in the past, just in the past here, almost 20 years ago now, we're in a little bit of a range here, some form of pattern, not the best triangle in the world, but it's clearly made an inverse head and shoulder pattern here, left shoulder, head, right shoulder. It popped up there. Notice how before it never respected the EMA whatsoever. Popped up, first retest of it after it broke out of its holding pattern in the key level, boom, to the upside. Notice it's 92.5 as well. It chopped around a bit, it then entered another pattern here, triangle, move up massive to the upside, pull back down, and again you got the Fibonacci 0.5, the 92.5, 93 level there on the monthly, and the monthly 50 EMA again. So I feel this will be the time it respects it again, and with the Fibonacci pullbacks and extensions, I wouldn't be too surprised to see it move up higher to this level here somewhere. This is a range as well between 100 and 93, so if you want to know the expected pattern distance of this range as well, let's do that to 1 to 1. So you're looking again 107, you are already from the expected pattern distance already on the range as well. So once it's in the range, you know, we expect it to move up and go up to about 107. So yeah, that's what I'm expecting on the monthly chart as such, and that all starts down on the daily and weekly. So for this bullish price action to really continue, it needs to respect 92, and it has to break out of this daily 50 EMA downward sloping trend line to the upside to get that bullish momentum to happen. But for that to happen, we need to pull back to 92, which means the dollar I would expect to be weak this week. That's the key thing here. So when we look at, say for instance, Aussie dollar, I see bullish price action on the daily chart. So let's go back to the weekly first of all in this one. What we've got an inside bar with a little tweezer, nice deceleration reversal. It's on this upward sloping trend line that's been valid since the start of 2016. And that's had now 4 touches, which is a very, very valid trend line. It's a smooth trend line, and we can trade off that no problem. The weekly EMA, 50 EMA, has done jack in this pattern whatsoever. It's never been respected at all, in all fairness. This here is not a respect. This here isn't really a respect. There's an actual key level there on the daily chart, but on the weekly it's nothing. It means nothing whatsoever. So I feel a move up to 77 would really be quite good. And I think it's quite likely now as well. And the reason why is because you got this, it trended downwards, no problem at all, and then we got in this bit of chop. It moved down, popped back up, moved down again, made a double bottom there, which is quite nice to see as well, and a nice decent bullish candle to the upside there. So I quite like that, and that's a good little trade there. MACD divergence is bullish now to the upside. RSI was oversold and overbought on the first one, so I expect to move to the upside now. Oversold side to this side, so a move upwards. It did move upwards. It created double bottom, so now you got this kind of strange signaling here you have, but that's just because it's made a double bottom, which is quite nice to see. If you look at the sorry about that, my phone is recording me as well at the same time again. How clever is Siri? If you look at the RSI on the weekly chart as well, that's bottomed out at 0, so there will be some buying pressure coming in here now. And like I said, you can see that onto the daily. On the intraday of this, on the 4-hour chart, this is what I'm kind of seeing at the moment. So I've got this little trend, got upward sloping trend line here. Got nice clean 4-hour bullish divergence on the MACD, which is quite nice to see. And the 1-hour chart, this is what I would be looking to target, something like this, 765 area, 766 area with the highest I'd go. I'm looking for a pullback now to this level here of 759. Notice how it was support, recent support, very recent, bit of chop around there, but it's been very recent. It's also a Fibonacci 618 pullback there. And again, you've got this kind of twisted MACD divergence there as well, bullish MACD divergence, which is quite nice to see as well. So a pullback there and move up to the upside, I wouldn't be quite surprised, and that's what I'll be targeting myself personally. On pound yen, so pound yen last week we outlined that if it breaks the 4-hour 50 EMA, it will break out to the upside. And although the daily was capped on this candle here, if you looked at intraday, what actually happened, it did break up, then come back down a little bit, and that was your key moment there. Unfortunately, I wasn't in the market at that moment in time, so I never got to trade this at all, which is really quite annoying because my target of 152 was perfectly hit as well at the same time. So if I show you the 4-hour now, what happened was this. Let me have a look. There we are. So you got this downward sloping trend line here. You had the little pattern there, and notice how it closed here on this candle here, and I was just waiting for another move up, then a pullback to test the 4-hour 50. It never happened, but notice how price cleanly broke up here. So if you saw the price here at 149.1 and you was waiting for a pullback, you did the right thing to wait for the pullback, because in all fairness you would expect that to happen, especially when you see this kind of candle here. So you saw it move up, then you had the 4-hour deceleration there, so I'd be waiting for the pullback. I would be to the 4-hour 50 EMA or some form of pullback, but we never got that. We got to move up, up and up and up. It just carried on moving up, so it never pulled back. So this, over the next couple of days, will pull back down to the 4-hour 50. Do I think there's a trade there now? Well, personally, no, because that means it's rejected this 152 area, and I think you're going to be stuck in the zone for a bit, or you're going to be trading in the middle of nowhere, because your trade will be here, and where you're going to go, it's just rejected 152, so really you want to go sell short. Well, no, you don't want to sell short, because when you look at the intraday time frames, you're selling to this 4-hour 50 that has been respected perfectly time and time again. So you've missed a trade. Essentially, the trade has now gone. There's no trade in my eyes there for how I trade, but some people would have caught it, no problem at all. So on this week, what's going to happen with this week? It's very hit and miss now. You could say we're in a zone. We've got two tops there, two bottoms there. So zones 152 to 148. It could be that. It may break to the upside here. It may just do this, that, and then if it does do that, come down to test the zone. If it does that in the next couple of weeks, that's perfect, no problem at all. But also don't be surprised if it does this, and don't be surprised if it does something like this and then do that. It could do all sorts of things, and personally myself, what I'd like to see is the first one up then down. I don't really want to trade long off this zone, because if you do trade in the middle of the zone, your stops needs to be below the lows, because you know as well as I do that it's been using it as quite good resistance. So if you got in like here, for example, your stop needs to be here, and you can't even target 0.7% profit is rubbish. Target 1-to-1, you've got to break out the zone, so there's no point for me in my eyes. But we got that correct, and the idea is as long as you can see what's happening in the market and not surprised by anything, that's quite nice to see. Euro dollar. So I've got a little circle here at 1.2. The reason I've got a circle 1.2, I think it'll go to 1.2 now personally, because if you look here, this was your head and shoulder pattern here. And just draw that back in again very quickly. This was the head and shoulder pattern, and what's happened now is prices closed above the right shoulder. So you know guys, I was already short euro dollar, and I was actually, my stop was at 1.192, so I did get stopped out here. I never moved my stop. Some people said to me I should have took profit here, but no, hold on a minute, I'm trading the whole entire pattern. Once you get down to the neckline, normally a retest the neckline would actually give you a 70% chance of winning the trade. We never got a test of the neckline. It did just power through it, but at the same time my stop was here for a simple reason. If I'm wrong, it's got to come up this high, it's got to cleanly break this head and shoulder pattern. And then obviously got a higher test, it come back down, it did test the daily 50. I didn't really care too much about that, purely because it's not been respected in this bit here. And the last time it got respected was, well, when we're going back, I can't call that a test, but you notice how it hasn't really respected the daily 50 EMA for a long time. So the fact it respected it there was for me not a major issue. But I'll take to leave my stop where it was, just purely because you're above the shoulders of the head and shoulder pattern. Now we broke above there, it's trending upwards on the 4-hour chart. So if I show the 4-hour chart again, guys, there we are, there's the 4-hour chart there, and again it's almost the same, the inverse of the DXY, testing the 4-hour 50 MA all the way up. Okay, no problem at all. So 1.2 isn't going to be a surprise for me. And when it gets to 1.2, that is what happens. That's another key area, because that's made a double top pattern that has. And again, if you come down to the weekly chart here, RSI was overbought here. It come down a little bit and then it's popped back up again. So we're going to see what actually happens there, in all fairness. And we'll go from there, really. That's all we can do, guys, to see what actually happens. But it does produce a double top pattern again on the weekly chart. The daily chart will show it a bit more cleaner. You may get another head and shoulder pattern here. You may get a double top on the double top itself. Anything can happen here. Or it may just break and retest and go up higher. If it closes above 1.22 though, guys, just to give you some indication of that, 1.22 is the key area there. So notice how this one here is on 1.22 and this is at 1.2. So it's a 200 pip, well, 150 pip gap there roughly. It's 1.2. I got my zone there. But if it closes above 1.22, that's cleanly trended higher still and into the triangle. And I wouldn't be surprised to even see 1.25 test. If it then breaks above 1.25, so let's say the price does this. I'm just giving you some examples here. Price does that and then does that. Oh, that's extremely bullish. That's extremely bullish on the euro or extremely bearish on the dollar. So that's something you need to be wary of there. Any break above this downward sloping trend line will be extremely bullish, and I mean extremely bullish. The only thing that would really stop that would really be the fundamentals, and we do have a new chairman coming into the Fed. He's going to be head of the Fed. I think he gets sworn in end of January, I believe it is, next year. So Yellen's leaving the as head, but I believe she's staying on as the as one of the governors until 2024. So she's still got a bit of life, you know, on the board itself, but you know, that's how it is. So yeah, I will just be careful there. It's a tricky one at the moment, and bear in mind we are in the silly season now. We are where retail traders will start doing crazy things, you know, get a mobile phone, 1-to-1 trading, whatever it is, and just put some trades on. So you do get some silliness, but if you use the higher time frames aren't going to lie to you over this time. So you might see some value somewhere, but just be careful. Guys, and that's a little bit longer than usual. Take care, and I'll see you soon.